Good morning, traders. I'm Michael Sabo, Senior Commodities Broker here with RJO Futures on Wednesday, October 16th, with some commentary here in the crude oil market. So let's get started here. Currently, crude prices here a little bit firmer right now. We're trading around 101.82, up about 62 cents here so far this morning. That's after hitting a low here earlier today of $100.75 a barrel. We're seeing nat gas up about 6 cents, and actually the complex is firmer as well, up about 2 to 2.5 cents here. And, you know, a lot of interesting things going on here right now. Obviously, we still have this whole debt ceiling debacle that's going on here, and they're only about, I think they said, about 13 hours away from a potential default. So traders are watching closely to see if there's some resolution there, and I'm confident there's going to be something there. It would be really interesting to see things if they didn't come to some type of agreement, or at least kick that can a little bit further on down the road. But nonetheless, traders are watching. If they do default, it's expected that crude prices would probably drop off here significantly. My best guesstimate is possibly in the $2 to $3 range. So we do want to watch that here. And also one of the things here is U.S. credit rating right now is on credit watch here. So that's, you know, we're really in a precarious situation. It has potential to affect a lot of markets. With that comes potential for a lot of opportunity. So you want to talk, give me a call, shoot me an email. We'll get into more detail. Now, demand side of things, as I've talked about in so many posts here, still very questionable. You know, something I pointed out in some of my earlier posts, we know IMF has been revising their growth outlook downward for much of Asia as well as China. So that's certainly weighing in on the horizon. And we know supply side appears to be adequate. Now, speaking of supply side, normally I would be talking about the EIA data here that would have been released this morning, but because of this partial government shutdown, there is no EIA data available at this point. So what traders have to look for here now is we got to switch gears here, look at the API data. Now, normally API data is American Petroleum Institute, that's private analysts. That normally comes out on Tuesday afternoon, but because of the holiday on Monday, that's been delayed to, you guessed it, to today in the afternoon. So we want to watch that data here later today, this afternoon here, to see what that has to say. Give me a call if you want to discuss that. Right now, analysts that have been surveyed are looking for another build of about 2.25 million barrels. So we'll kind of keep an eye on that. But if that is the case here, you know, we've seen some real consecutive builds here, obviously pushing our current stockpiles here right now. As of the last EIA report, we're about 370.5 million barrels, which is certainly on the high side of things. So we got to watch that. Something else that's helping keep a little bit of pressure on oil, Iran has basically come out and said that they are willing to allow inspectors possibly a little bit of further access into their nuclear program. So that's helping take a little bit of the fear premium out of it. The market. Syria, as you know, you watch any of the news outlets here, they're really not even talking much about Syria, even though they still have a bloody civil war going on there. So again, fear premium coming out of the market. So where do I think prices are heading to? Obviously, my opinion right now is I think that they are heading lower. $100 a barrel, very psychological level, but I think that's where we're possibly heading. 200-day moving average coming out right now is right around about $99 a barrel. So I think ultimately that's probably where this market is heading. So, you know, we got to keep posted, keep things posted here on what this inventory data is, because I think that has the potential, and certainly how things are going to play out here with this default certainly has the potential to set the tone here for the rest of the week. Give me a call, shoot me an email. We've got some different strategies here that we can discuss here, some ratio plays in the options market that we're looking at to take advantage of the market here to the downside. Short-term technical indicators, a little bit in the oversold area, but, you know, I think rallies at this point, my opinion, probably should look for entry points to get short. So again, give me a call, shoot me an email. We can discuss those points, kind of fine-tune it a little bit. Of course, keep in mind that futures trading does involve a substantial amount of risk. It may not be suitable for all traders. Good luck and good trading.